Alright, so I'm going to try and do a series of videos again today. Like the videos at the beginning of the week. Hopefully we won't have another gas leak in the neighborhood. So what are we looking at here? Okay, let me zoom out a little bit so we can see. This is a recent move up from the low in August. And if you remember, initially I had, I think it was, let me move this back. Yes, it was a trading lane which looked, something like this. And the market obviously broke out of that. You could see the market came up to a high here, but then started to round off. The market punched through the bottom of the trading lane, but then since recovered. But look at the difference in the angle. Okay, the line. Let me use an actual line. The line, or what an engineer type would call a regression line, but basically it's an average that gives you the slope. Okay, how fast is the market going up? Just look at the difference here. Okay, so the market is obviously slowed down. There was a bit of volatility or velocity over here. There was a bit of speed over here, and then the market starts to round off, and then the market starts going back up, but the speed goes down. Okay, so what I did was I drew another trading lane here that I felt was a little bit better representation of this short-term trading action. So what can we see here? Well, we can see that the market's rounding process has continued. Okay, whoops. So it's rounding over. What I've been talking about is this being bearish. The volume has increased. You can see this really well here with this average. The volume has increased as the market has gone up, but there was no follow-through. So if we're looking for a bearish scenario, the market will come down and then retest this area either through here, possibly even coming up for a double top before eventually moving down. So we've got to watch for this type of move here. Now the question is, do you try and make money as the market goes up? That I think is really depends on your risk appetite and whether or not you can stay and observe the market. I think that we have a viable trade set up here. The 3-bar reversal is actually getting ready to break right in here, even on an hourly basis. So there's definitely some momentum in the marketplace as it starts to break through this area here. But we've got to keep in mind that the market. Let me go to a 4-hour bar because it gives us a little bit better idea of the support and resistance areas. The market might run into resistance right about in there. Okay, you can see there were several highs in this area here, several lows on this area here. Okay, so there is where I put the resistance line. That's not a whole lot of distance where the market might actually start to reverse back down. So that's one thing to keep in mind. If you were looking to take a trade in this type of area for a day trade, you have to keep that stuff in mind, and just stay on top of the position if you're looking to take one. Now, taking a trade down in this area, you'd be anticipating a move back up either to this angled line here, or at the very least back up to the highs in this area here, or along this zone right there. So about 335, maybe to as high as 360 in this zone like that. So you can see with the market trading at 85, that gives you about 45 pips on a decent breakout. Let me just go ahead and put it right there in the middle. So about 52 pips. Risk at this point, at the very least, would be down here below the line. You can see that's 34. And a conservative stop would be below the prior lows, which is 65. So, again, you can see where you've got to be very careful with taking trades in that type of area. Now, one way to decide whether or not you're going to take the trade is to run through some of the expectancy exercises. And the reason why I brought it up yesterday is because this can be a very good way of deciding on whether or not to take a trade. Remember, the expectancy